In our Trader Rundown today, Alan Nuckman joins us for what could turn out to be a very busy trading day. Good to have you on the show.
Hi, Ange.
So first off, we have to mention the Fed meeting gets underway. What will that mean to traders?
Hopefully not a whole lot. There shouldn't be any surprises. Nothing will be done in June. There's only about a 50% chance that something gets done by the end of the year, but it'll be something to talk about.
And people are still talking about this big deal between Microsoft and LinkedIn. The options paper really did not show this.
Nothing
was coming up. It was a very secretive deal.
Yeah, and usually that doesn't happen. Usually there's some insider action, and there was nothing on Friday when I went through all the LinkedIn options. I didn't see anything. Microsoft trades a lot of options, so you just don't know if there's any motivation there, thinking that it could maybe sell off a bit as it did with some profit taking after they spend that large amount of cash.
What would be a play at this point in Microsoft or LinkedIn? Would you go with Microsoft since it looks like a done deal?
Yeah, I like Microsoft here, even regardless of what happens with this LinkedIn deal. It's 10% off year to date. And the synergy ideas, obviously these guys are a lot smarter than we are, they're thinking that the LinkedIn is going to allow them to get into the business enterprise area where people will be working on projects and they can just link in someone else to help them finish their project.
And they also get into video more or any other social media aspect. So I think it's going to be a great deal at the end of the day.
It brings Microsoft forward kind of into this, into this social networking area. So I think it's very much a positive. And Microsoft still has a lot of cash on hand even after spending that $25 billion.
Yesterday, Microsoft shares sold off about 3% on the news and dipped below $49. But where do you see this stock going from here?
Well, I think this is a great area to lean on from a risk-reward level. Microsoft has been trading between 56 and 48 for 8 months, so since October. So lean on this 48 level here. I'm looking at a 45 call for January, has 7 months of time. It's deep in the money. The break-even's $1.50 higher. Look for good things happen to Microsoft. Look for it to get back to 56, and if that happens, that option will be a 50% gainer.
And of course, now that this has happened and we saw LinkedIn shares move $68 higher. Yeah. I mean, the people own that stock. They're so happy right now.
50% premium, and it's a cash deal. But let's put this in perspective. There's still a lot of other brands out there. You know, LinkedIn had been beaten down. Look at something like a Twitter.
A lot of people are looking at Twitter.
Somebody's going to come in and try and monetize that as well. You know, there are companies with a lot of cash on hand that want to put it to work, and those are nice pieces to add to the portfolio.
Thanks for working on our show today.
Thank you.